warn you, mother of all crashes is coming.
It's just like
2008. Banks are collapsing.
Just like
2008. Credit event.
it is just like
2008. Interest rates. PE ratio is high.
Oh my god, you guys, this is exactly like that one party.
2008.
It gave my god. Oh my god, it gave me that like a doctor.
Chill out, my left nut. Markets are range bound for 6 to 7 months. What do you mean, crash? It's just like 2008.
Shut the fuck up.
Markets up in SPY QQQ IWM DIA for the week. Comes to show, fuck your narratives. Focus on the price. If you are a trader, especially shorter term, all the above mentioned stuffs don't even matter. They're called risk. If you enter the markets, filled your head with all these bearish buyers and short the bullish tape, it's not the hedge fund's fault you lost money. It's not the dumbasses who posted the Twitter screenshot of other dumbasses' bearish doom and gloom stuff's fault that you lost money. It's yours and yours only. If you're a new trader who are just starting out with the markets and know that the higher interest rates are bad for the stock market, you think the market doesn't know that? Hear me out. If Jerome Powell is having a diarrhea, markets will price that in when he's eating a Taco Bell 2 days back. Markets are forward-looking. Sometimes it's just too difficult to take these macro folks seriously when they have been consistently wrong since the beginning of 2022, but want to pretend like they know what they're talking about. Anyway, in our last video, we had 3 important areas anchored in the charts. The all-time highs Avwap from SPY coming in at all the way from 480, year-to-date anchored VWAP coming in from Jan 3rd, and the 52-week close anchored VWAP coming in all the way from October. We anchored these price points because price gave a significant bounce from these levels. In the members-only video on Tuesday, I shared how we anchored the last Monday's lows at around 380 as the price reversed back from that area. I also mentioned we are going to leave this anchor point in there until something changes drastically. Nothing changed drastically, so it stays there. Let's move on to the 15-minute charts. Price found support at that 390 to 392 zone, which was mentioned before in the Friday morning notes, and pushed higher. Leading into Friday, I had a range of 390.21 to 390.60 to the downside. If they failed there, I had the 39.36 zone as a potential area of support in the S&P 500 futures. I say potential here and not saying it will act as support because we don't know if a support is support or a resistance is resistance until after the fact it happens. You can have 100 lines in your charts and call it support or resistance levels, but that doesn't mean market has to respond or react to every single line you have. Those are your levels. At the end of the day, markets doesn't care about the lines you have on your chart. It's gonna do what it always does. If you're new to the markets, you must have been in this position before, buying into the so-called supports blindly only to see the markets melt through this level like a hot knife through butter. We don't buy supports blindly for the same reason, because we don't know if a particular level is won or not until after the fact. We buy the strength from the support with the stops at the lows. By doing this, it gives you a better control on your position and gives you a sight on where to get stopped out if you're wrong. Leading into next week, the job continues. Damn, don't you all get tired of me reciting the same levels over and over? I remember going through the same levels last week. But you managed to stick around. I appreciate you if you stick around after pressing that subscribe button. The year-to-date anchored VWAP is sitting at 397.41 and change. If bulls manage to stay about 39.80 in S&P 500 futures or 395.30 in SPY, watch out for them to potentially run a test to this year-to-date anchored VWAP, which is at around 397.41 and change. Anything above it, I'll be keeping an eye out for them to potentially run a test to this big fat round number at 400, followed by the highs made after the FOMC at around 40.80, which will be around 402.60. QQQ, the Nasdaq, is still remaining the strongest looking indices of all. They pulled back to run a test to this positively sloping 5-day moving average and held it as support and bounced higher. This is the reason why you don't blindly short an uptrend. Uptrends are innocent until proven guilty. Leading into next week, I I will be watching out for that all-time high Avwap, which is currently sitting at around $314.50. Longer they stay above the positively sloping 5-day moving average, longer the Apple is holding about 157. It's all lining up for a reckoning for all the bears to get short squeezed. This will change if QQQ starts losing the 5-day moving average and if this 5-day moving average starts to curl negative. I won't short this for chump change until that happens. I will know it for sure if they start losing the 305 zone, which was the lows made after the Powell's FOMC disaster. Until then, the trend keeps trending. You can either be the smart money and follow the trend, or you can keep shorting an uptrend and keep blowing up your accounts. Hey, it's your money. You do whatever you want with it. IWM. We took some trades in this last week. It was a good one as well. We spoke about this in the members only video last Tuesday. We entered the trade at around 173.20 and got rid of it at 177. IWM's close last Thursday and the gap down on Friday morning kind of concerned me, to be honest. Even though it concerned me, that concern is just a bias. I don't want to short the tape blindly into the opening print because Friday marks the close of the weekly candles as well. They will sometimes try to push the price back up to close above an important area to close the weekly candle not so bad. That will be a bear trap. Thursday they made a new low and Friday they opened at a new low, but they closed at the highs of the day. They sucked in a lot of bears thinking that it's gonna go down much lower, only to whack them right in the face. They did exactly that. How do you know that if that's gonna happen? Anchor the VWAP right at the opening candle. That's gonna tell you who's in control of the particular trading session. If the anchored VWAP is sloping positive and the price is above it, the average buyer is making money and an average short seller is losing money. They did exactly that. IWM has been trading in this range of 177 to 170 for quite some time now. The weekly close recaptured this range as well. This is the weakest looking sector of the other three indices, trading under the 5-day moving average as well. This will come under the category of guilty until proven innocent, unlike QQQ. I need IWM to cross above 173.50 and start to consolidate here for quite some time until the 5-day moving average starts to curl positive and the bulls take back control. But Mario, you will lose $3 move to the upside if you don't buy here. I would rather wait for confirmation and enter after the bulls take the control and then buy the strength than playing guessing games here. I usually swing trade and I need to see the buyer stepping in with proper stops on, and I can enter this with confirmation. We spoke about XLF as well before. I got stopped out on the trade and took a small loss. If they show strength again, I will re-enter again as well. If you want to view these trade ideas real time, feel free to join the Patreon and the Discord channel from the link down below in the description. If the concept of Avwap sounds foreign to you, check out the Brian Shannon book, which is linked in the description as well. As always, take high probability trades, manage the risk wisely. I'll see you guys in the next video.